What's up, guys? It's your boy Quick Stocks. As always, remember to hit those thumbs to recharge my dopamine, and we'll get right into your quick stock analysis of Snap Inc. Ticker symbol, well, you guessed it, Snap. Trading for $44.20 as of October 24th, 2020, equating to a market cap or capitalization of over $64 billion. It's been an absolutely crazy ride for Snap investors this week, as the company is up over 50% in a single trading week and 210% in the last year. So what's the move? We've made countless videos discussing Snap, all in which we've rated Snap an easy buy. However, this is when the company had a market cap of under $30 billion. Now that the company has more than doubled in share price, investors must ask themselves, is Snap still a buy? This is your quick stock analysis. As most of you are already aware, Snap stock has gone on a massive tear after reporting its third quarter earnings, where they absolutely shattered expectations. Revenue surged 52% year over year to a whopping $679 million, which beat estimates by $127 million. Along with this, the company's net loss narrowed to $200 million. And wait for it.
Here comes the money.
Here we go. Money talk.
The company generated an adjusted EBITDA of $56 million compared to a loss of $42 million a year ago, which is certainly a true highlight for Snap investors to see the company be EBITDA profitable. Snapchat's daily active users grew 18% year over year to nearly 250 million. The intriguing part about this is the fact that daily active users in North America stayed flat and remained slow in Europe. However, its users in the rest of the world absolutely surged with a 43% increase year over year. Sadly, Snap doesn't break down its rest of world segment by individual countries. However, the company highlighted India as an area of strong growth, which, as we mentioned in our previous Snap analysis, one could have expected as TikTok was banned in the country in late June. And the good news just kept coming as Snap's average revenue per user rose 28% year over year to $2.73, which, as you can see here, when we look at the breakdown, Snap's average revenue per user in North America for Q3 2020 was $5.49, representing a whopping 61% increase quarter over quarter. Following this, European users on average rake the company in $1.43 and just 95 cents in its rest of world category. So critically, what does this tell us? Even though Snap's daily active users in North America has remained relatively flat, the fact the company's average revenue per user rose 61% indicates users are spending more time in Snap's ecosystem, including their filters, lenses, videos, games, and its other content, which is certainly offsetting the company's slower daily active user growth. Let's keep it moving. Snap's ECPM, or effective cost per thousand impressions, rose 20% year over year, marking its first quarter of ECPM growth since the company went public. In layman's terms, this means Snap's pricing power in the advertising space is improving. However, an investor should take into consideration Snap's ECPM remained well below market rates, which indicates it certainly has room to raise its prices. Finishing off the company's earnings call, the company didn't provide exact guidance for the fourth quarter, but stated they would have a 47 to 50% year-over-year revenue growth if current favorable operating conditions persist. So what does this all mean for the average investor? Well, take into consideration many large investment funds are only able to invest in companies who are profitable. This is one of the reasons we've seen such a staggering rally in Snap. As large funds gain the ability to invest in the company, they have chosen to pour billions of dollars into Snap in the hopes the company continues to gain market share in the highly profitable social media space. And to be frank, it's great to see Snap finally getting some love. As I'm obviously way overgeneralizing, but only millennials and Gen Z really understand how ingrained Snapchat has become in our generation's everyday way of life. A lot of these naysayers state Snapchat doesn't have a moat and they will never be profitable. Well, clearly they've been proven wrong. Yeah, TikTok is becoming absurdly popular, but it's not a replacement to Snapchat. Yeah, Instagram tried to copy Snap Stories, which clearly hasn't slowed the company down. Yeah, Facebook is much larger, but once again, it's not a replacement for Snapchat. If you ask most millennials their preferred way to communicate with friends, it's most likely going to be Snapchat. That's a dopamine moat, baby. So what's the move? In all honesty, for someone looking to start a position in Snap, you should take into consideration the well over $64 billion market cap. Expectations in the company have become extremely high, and a lot is going to be riding on the company's Q4 2020 earnings, where we will gain a better insight to if the record growth is sustainable, especially around the world. Anyways, in regards to our quick stocks long-term portfolio, we have a total of 170 shares of Snap, equating to $7,300, representing 280% and 75% gains between our accounts. Along with this, we are invested in multiple other companies who give us exposure into the social media space, including just shy of $5,000 invested into Facebook, a few thousand into Tencent, who actually owns 10% of Snap, which is a small fry when compared to Tencent's other social media, including QQ and WeChat. Finally, we have over $10,000 invested into Google. For this reason, we don't really have the desire to increase our position in Snap. However, don't take this as a bearish sentiment in regards to Snap, and I certainly won't be selling any of our shares. However, an investor should take into consideration Snap stock is trading at around 30 times this year's sales, where Facebook, who is much larger and firmly profitable, trades at around 10 times this year's sales. So, final thoughts. As a long-term investor, I do believe Snap is still a buy and hold for years to come. Although it pains me to say it, at a $65 billion market cap, short-term investors could certainly find better investment with less volatility, at least in the short term. As I do think investors have become too optimistic and are overlooking many of the challenges the company still faces. The primary one being if the company can continue to increase profitability. Even though currently they have a decent balance sheet, their cash pile will continue to dwindle and eventually need to raise additional capital. And at this point, any step in the wrong direction would certainly spook investors. However, Snap has strong retention in the US, UK, and France as they continue to reach over 90% of Gen Z and 75% of millennials. If they can continue increasing their eCPM, which, like we noted, is still well below the industry average, and continue to attract users across the rest of the world, Snap investors should be rewarded for many years to come, and we will certainly be around for the ride. Anyways guys, that's all we've got for today. As always, the best investment you can make is to go long on quick stocks. Hit that subscribe button now at 1,890 subscribers and plan an early retirement. I will catch you guys in the next one.